Hi guys, I hope you're doing well, and in this video we're going to be discussing about the difference between gross and net investment, which also forms part of the topic of PPC. And basically when you talk about, so basically in the previous videos we talked about how economies should invest more in capital goods, right? They should invest more in capital goods so that their production possibility curve shifts outwards. And we studied that if you're investing more in capital goods and you're sacrificing the consumption of consumer goods, the production and hence the consumption of consumer goods, then economy is basically making a trade-off. And so if you're somewhere over here at point, let's say point C, and you're investing more in capital goods, then ultimately in the long run your production possibility curve will shift outwards to the right. Something like this is going to happen, right? And so what it means technically is what we are saying is that the more we give up today, the more we can have tomorrow. That is, the more we give up today, as in the consumption of consumer goods that we give up today, the more ultimately we will have more consumer goods for tomorrow. The more consumer goods we will ultimately have tomorrow for our consumption. But the thing is that we need to understand that when we are saying that we are investing more in capital goods, we also need to understand that capital goods, that is investment in capital goods, is differentiated between gross and net investment. And when we are saying that you are investing in capital goods such that your capital stock is increasing, that is, your capital stock is increasing, that is what will actually lead to a shift outwards of the PPC. Now hang on a second, I explain what I'm trying to say. So what I'm trying to say is that when the economy invests, let's say $100 billion into producing capital goods, some of that capital goods that you are investing in is basically part of replacement investment, where you're replacing your old existing depreciated capital. So that capital, that investment is not going to increase your or shift your productive capacity outwards, right? And hence it follows that we need to differentiate between gross and what net investment is, because investment is, when we use the word investment, we are talking about the expenditure in capital goods. That is what investment in economics is. That is expenditure in capital goods, right? So when we talk about gross investment, guys, what we're saying is that gross investment is basically the total expenditure on new capital within a certain period. New capital means you're just coming up with new machines, such as machinery, buildings, or infrastructure, right? So, or whatever expenditure you're doing on machinery, buildings, equipment, and infrastructure, that is gross investment. And it basically represents it sort of represents the sum of all capital investment that is made by the firms in the economy, regardless whether that investment made by the firms is to sort of replace worn out equipment or to expand productive capacity. So if the firm is, all the firms across the economy are investing in new capital, whether that new capital that they're investing in could either be to replace the existing worn out capital. Sorry for this. Looks like this. I've written like, I think I've written a. It even looks like a worm. it even. Okay, whatever. Anyways, so to replace your worn out. So basically, I just lost track. Anyways, so the firm. All the firms in the economy are basically investing in your new capital, whether that new capital is to sort of replace your worn out capital, or it is to expand productive capacity. So the new capital could be for these two purposes. Now, the fact that you're replacing worn out capital is basically also known as capital consumption or your depreciation, or in economics this is also termed as replacement investment, right? And so what we are saying is, guys, this is what gross investment is all about. That is a total expenditure on new capital, like the machinery that you're building, the factories that you're coming, the factory buildings that you're making, the plants that you're making and coming up with, on the infrastructure, and it is representing the sum of all the investment that is made by the firms, and regardless of whether it is done on replacing worn out equipment or to expand capacity, productive capacity. Which means that we also need to understand what net investment is. Now, when we talk about the word net investment, it is basically derived. Net investment is just gross investment minus capital consumption, that is depreciation. And depreciation is simply, your capital consumption is referring to all that expenditure that is done to replace your old worn out machinery. That is, it is representing simply replacement investment here, right? So it is representing the depreciation or capital consumption in the context of economics is referring to the replacement investment that you are doing to replace the worn out capital, right? And so it follows that your net investment is basically gross investment minus replacement investment, right? And so which means that if the gross investment is more than capital consumption, your net investment will be positive. And if your net investment is positive, it means rise in capital stock. Hence, your production possibility curve will shift outwards. Now, what we're trying to say over here is that your net investment is basically measuring the actual increase in the nation's productive capacity. Net investment is what will determine whether your productive capacity is increasing or not, right? So when you're mentioning that more investment will take place in the economy, then you also need to mention that what you're talking about. I mean, more expenditure could take place in the economy, but again, this is again will form part of evaluation. Because remember, in the evaluation, we said that, remember I showed you the question, you guys, the question as well. One of the past paper questions was focusing on consider whether choices made by the economy to produce more capital goods would result in what sort of long-term effects will it have. So yes, we agree that investing more in capital goods will cause PPC to shift outwards, but not all investment. It is only when it is only when your net investment is positive will the capital stock rise and PPC will shift outwards, because net investment is what is actually measuring the increase in the nation's productive capacity. And if the net investment is positive, it is indicating that the economy is growing. If a positive net investment is indicating that the economy is growing, your economy is growing, because what it is showing is that new capital. Why? Because new capital is basically being added. New capital is being added after replacing your depreciated capital. That is why. And on the other hand, on the contrary, or let's say conversely, if the net investment is negative, if this value is negative, it suggests that the economy's capital stock is shrinking, right? It is shrinking, and right, that's not good. The economy will sort of result in a PPC inward shift, right? And if you talk about what capital consumption or depreciation is, capital consumption or depreciation is, or replacement investment is basically, it is representing the wear and tear or the obsolescence or the aging of the existing capital assets over time. And hence what it follows is that firms need to replace that. And hence we know that capital goods do not, last for an indefinite period of time. And obviously firms must continue to invest to replace the older assets, right? That is your existing machinery or infrastructure. And so this replacement investment that firms do is accounted for in the gross investment. This will form part of gross investment, as in the value of the gross investment would include the investment on replacement, replacing your old capital. And so this replacement investment will be accounted for or factored in the gross investment. But the thing is that this replacement investment does not contribute, although this replacement investment is investment in capital goods. मैं repeat कर रहा हूँ, this replacement investment is investment in capital goods, but this sort of an investment is not going to contribute to increasing the productive capacity of the economy, and hence you sort of deduct it when you are calculating net investment. So guys, just a quick numerical example I could give is that if the entire economy spends, let's say, $1 million on new machinery, so this is your gross investment. That is, $1 million is being spent on new machinery, that is gross investment. But the capital consumption or the replacement investment of the existing machinery That is out of the 1 million that was spent, 200,000, let's say, 0.2 million was basically spent on capital consumption or replacement investment. That is, it was spent on replacing the existing machinery. So the net investment in this case is 0.8 million or $800,000 positive, right? So the gross investment will include both the replacement of depreciated capital and the addition. This is representing the addition of capital stock, increase in capital stock, or the addition of the addition of new capital. And so your net investment basically, which is 0.8 million, this $0.8 million investment actually represents a real expansion. This is your real expansion of the economy's productive capital, after accounting for capital consumption. And basically I've tried to link this on a PPC diagram as well. And let's say this is an economy, let's say an economy of Pakistan, and you have different points, point A, B, C, D. And so let's say that, you see, so expenditure on capital goods is your investment, and let's say that point B on the PPC is referring to, or if let's say the economy is doing OX level of investment in capital goods, OX level of investment in capital goods, that is basically representing your capital consumption or replacement investment. So whatever investment then that will be done beyond point C, let's say beyond point B, let's say, would mean that your net investment would now be positive. Now I want you to pay very close attention to what I'm saying. So let's say that you have this production possibility curve, and what I've written is that capital stock only grows. That is, your capital stock will only increase when the total investment exceed capital consumption or replacement investment. अब जब आपकी total investment is exceeding capital consumption or replacement investment, it means that your net investment is positive, जो अभी हमने पढ़ा. And let's assume that the rate of capital consumption, for this economy is given by OX, right? This is referring to the rate of capital consumption, or let's say this is the amount of, or let's say this represents the capital consumption that the economy is doing in this diagram. So let's say that point C, this point C is basically lying beyond the rate of capital consumption, that is depreciation. So if you're saying that the economy of Pakistan is producing a combination at point C where it is sacrificing so many capital goods and producing so many capital goods and sacrificing so many consumer goods, and if the economy of Pakistan, let's say, is at point C, then ultimately it is lying beyond the rate of capital consumption. So ये थोड़ा सा आपकी और analysis को ये depth में add करेगा, और एक evaluation में भी बात आएगी इससे लिंक. तो थोड़ा सा जो बहुत ही कोई टेक्निकल, और समझ लें कि आप बहुत ही कोई A स्टार वाला स्टूडेंट होगा ना, वो इस बात को मेंशन करके आ जाएगा. ठीक है. नॉर्मली एक एवरेज स्टूडेंट से हम एक्सपेक्ट नहीं करेंगे ये, लेकिन एक A स्टार टॉपर होगा, वो इस बात को मेंशन करेगा. डिफरेंट टेक्स्ट बुक्स में इस बात की रेफरेंस इंडिकेशन हुई हुई है. ठीक है. सो व्हाट वी आर सेइंग इज कि पॉइंट C जो है वो लाई कर रहा है बियॉन्ड द रेट ऑफ कैपिटल कंजम्पशन, बियॉन्ड द पॉइंट वेयर that expenditure on capital goods is representing replacement investment, and therefore हम कहेंगे कि भाई PPC आपका आउटवर्ड शिफ्ट होगा. लेकिन अगर आप देखें पॉइंट B पे भी तो पॉइंट A पे भी तो इकोनॉमी इज इन्वेस्टिंग इन कैपिटल गुड्स. लेट्स से एट पॉइंट A इट इज इन्वेस्टिंग एट, लेट्स से, OX prime level of, this OX prime is representing, the economy is producing X prime level of capital goods, right? तो अब ये जो X prime level of capital goods आप बना रहे हैं और whatever, तो ये भी तो investment in capital goods है. बट ये पॉइंट ये है कि ये भी तो इन्वेस्टमेंट इन कैपिटल गुड्स है, लेकिन क्योंकि ये इन्वेस्टमेंट इन कैपिटल गुड्स बिलो द लेवल ऑफ रिप्लेसमेंट इन्वेस्टमेंट है, तो पीपीसी आउटवर्ड शिफ्ट नहीं होगा. पीपीसी का आउटवर्ड शिफ्ट होने के लिए कैपिटल स्टॉक का इंक्रीज होना जरूरी है. इसका मतलब कि आपकी जो नेट इन्वेस्टमेंट है वो पॉजिटिव हो. ये तब होगी जब ग्रॉस इन्वेस्टमेंट यानी टोटल इन्वेस्टमेंट रिप्लेसमेंट इन्वेस्टमेंट को एक्सीड कर जाए, जो कि पॉइंट सी पे हमें नजर आ रहा है. सो ऑल इन्वेस्टमेंट या एवरी इन्वेस्टमेंट इन कैपिटल गुड्स विल नॉट कॉज एन आउटवर्ड शिफ्ट इन पीपीसी. तो ये बात इवैल्यूएशन में लिख कर आएंगे आप कि भाई ठीक है, एक्सपेंडिचर इन कैपिटल गुड्स could result in a rise in productive capacity, but not always. Only when it is beyond the rate of capital consumption. Because ये PPC बना के आप आएंगे और आप ये शो करेंगे, आप बोलेंगे similarly point A shows a level पॉइंट ए शोज अ लेवल वेयर द जनरेशन ऑफ फ्रेश कैपिटल दैट इज ग्रॉस इन्वेस्टमेंट, यानी जो भी कैपिटल गुड्स में एक्सपेंडिचर्स हो रहे हैं, जितने वैल्यू ऑफ कैपिटल गुड्स प्रोड्यूस हो रहे हैं इकोनॉमी में, दैट इज ग्रॉस इन्वेस्टमेंट, इज फॉलिंग शॉर्ट ऑफ कैपिटल कंजम्पशन, राइट, इज फॉलिंग शॉर्ट ऑफ कैपिटल कंजम्पशन, राइट, यानी जितनी भी इन्वेस्टमेंट हो रही है वो उतनी भी, यानी वो उतनी भी अभी नहीं है कि वो रिप्लेसमेंट इन्वेस्टमेंट को पूरा कर सके, यानी जितनी रिप्लेसमेंट इन्वेस्टमेंट रिक्वायर्ड है उससे कम ही हो रही है इकोनॉमी में इन्वेस्टमेंट, टोटल इन्वेस्टमेंट दैट इज ग्रॉस इन्वेस्टमेंट इज लेस देन, इज फॉलिंग शॉर्ट ऑफ कैपिटल कंजम्पशन, एंड हेंस इससे क्या होगा, इससे अल्टीमेटली आपकी इकोनॉमी का पीपीसी जो है वो इन्वर्ट शिफ्ट हो जाएगा इन द लॉन्ग रन, इट विल बी अ वेरी बैड नेगेटिव शॉक टू द इकोनॉमी, और इकोनॉमी विल श्रिंक in the long run, and hence you see this is such a good evaluation that you can make, and hence this diagram is a very good diagram that you can use in the exam, but असल चीज़ होती है कि आप डायग्राम बना के एग्जामिनर को किस तरीके से समझा रहे हैं, तो आपके एक्सप्लेनेशन में भी क्लैरिटी होनी चाहिए, कि जैसे कि जब एग्जामिनर ये डायग्राम देखे तो वो आप अज्यूम मत करें कि एग्जामिनर को पता होगा कि आप क्या कहना चाहते हैं, ये वाली अप्रोच नहीं होनी चाहिए कि उसको पता होगा, ट्रीट हिम उसको कुछ नहीं पता और आप ही उसको बता रहे हैं सब कुछ, राइट। So guys, I think we're done. So I hope you have understood the concept of gross and net investment, and so that's it for this video guys. I'll see you all around in the next video. Until then, take care.